Good morning and welcome back, everyone, to the Schwab YouTube coaching channel. It's our Wednesday edition of Trader Talk in today's market. I'm your host, Kevin Horner. It is a beautiful sunny morning here in Denver, Colorado today. Pleased to be joined by my friend, fellow Schwab coach, Rachel Deshelle. Good morning, Rachel. It's great to see you. How you doing?
Good morning. Great to see you as well, Kevin. I'm doing great on this morning. How about yourself?
I am very good. Thank you for asking. Now, inevitably, on days that I'm away from the market, away from the YouTube channel, the market took a little bit of a move to the downside yesterday. So this is a consistent development for me. I try not to take a whole lot of days off, and yet when I do, the market just moves. So we have plenty to talk about there, that's for sure, with some significant levels kind of tested yesterday. So plenty for us to talk about in that way. We're also joined by Barb Armstrong in the chat this morning. So please say hey to Barb. She'll take care of comments and questions Rachel and I aren't able to get to, but you all know Rachel and I will keep an eye on the chat there. We want to hear from you. So please take a minute and drop some comments and questions into the chat. We'll bring those into our discussion as well. If you're not already doing so, a great way to engage with us coaches when we're not hosting classes is on X. You can follow the three of us there, Barb Armstrong CS, Rachel CS, and Kevin Horner CS. We would love and appreciate a follow there. Very helpful for us. Now, let's get to our disclosures and we'll dive right on into the important stuff. Please remember, our conversation here is exclusively informational and educational. We do not make recommendations. We do not make endorsements for any specific approach to trading the market. We do, however, discuss concepts and strategies from a technical analysis standpoint that traders may choose to employ, but these are merely that. Strategies, concepts that you should do your due diligence on. Carrying those into your thought process, into your trading plan, that's up to you, obviously. So please make sure you're running through your own requisite steps as you go through your trading planning and your trading process, which we do. One thing we can say we encourage is to have a plan and a process to your trading. Now, as far as an agenda, if this is your first time joining us for Trader Talk, we take a top-down approach, meaning we start with the broadest of the indices. We'll look at the S&P 500, the NASDAQ 100, the Russell 2000, work our way into the industry groups as well, semiconductors, transportation index, looking at yields and our sectors that are moving today, not to mention stocks in the news. So hopefully, as we have a whole large list of stuff to get to, we'll try to get to as much of it today as we possibly can. So, Rachel, we're going to lead with the S&P 500 as we are commonly going to do. That level we dropped to yesterday, kind of one we've been talking about, needing the 50-day moving average test. We got down there. It's kind of a decision point now, isn't it, suddenly?
Yeah, definitely looks like it is. We had this rising wedge for the last few months, really forming this really bullish move to the upside. And then we had that drop yesterday. We couldn't hold that 50-day moving average. It seems like today we're trying to climb back up to reach that. But honestly, it looks like we do have a little bit of an inside bar day. So there may be a little bit of a pause, a little indecision today as the market kind of awaits some of the news that may hit in the coming days or so, just with tariffs and kind of fears around there and everything. But something that's not quite shown on your chart, Kev, I would say is a 100 period moving average. And that's probably going to be that next level of support there. Not too far from where we are now, less than a percentage point away, probably.
Great call out, considering the last time we tested a horizontal level of support, it actually found a trend level of support, that being that 100-day moving average that I've just applied here via my my quick hits up above. So 100-day moving average, yeah, down beneath us here today at 67.48. That no 75 points beneath where we are right now, could be an area for where we could hold up potentially. Now that level down below, equally important though, around 65.45, 65.50, an area that has been tested for support. So an eyeball area potentially if we were to take out that 100-day moving average or so. Certainly an opportunity for us. But as everybody knows, if you're a watcher of this segment specifically, you know that one of the things we're looking for now is how we act relative to yesterday's bar. So last thing we'll talk about on the S&P here, Rachel, is the movement above yesterday's high or below yesterday's low. That's apt to dictate our next short-term move here.
Exactly. Yeah, that definitely is. And I think it's important to note too, we obviously see this short-term break in the trend because on the short term we made a little bit of a lower low, but like you said, and like you called out some of those longer term levels, if we hold that level right around that 65.50 or so, even just in the long term, still the long-term trend is not broken in that case. We still wouldn't make a lower low in that case. We're just seeing a little bit of short-term weakness here so far.
Yep, I think that's the proper way to consider what we've seen here. Nobody likes to sell off, but at the same time, what we are witnessing is a limited sell-off to this point. Still important that we individually know the levels underneath us where we would take action. For some of you, it could be that really tight low. Making a move under yesterday's low and telling us there could be more downside thereafter. Some traders would choose to lighten up on a close under yesterday's low. Doesn't mean that it's the right decision. It just means moving to a more comfortable position for us individually is really what we want to encourage, because comfort along the way is part of that, being able to stay invested as long as possible. So always find the comfortable level of your investment dollars or dollars deployed to the market. Now, Rachel, let's take a peek here at the NASDAQ 100. A similar move, although we've been talking about the inability of the NASDAQ 100 to make those new highs up here, and it's played out bearishly. Broke the uptrend line that we had in place, and now we are 2 days below the 50-day. We're kind of looking a little bit more weak, and as we'll move off of this momentarily, but I wanted to give you the chance to speak to this, but it's pretty clear that the technology space is the one taking the hit here of late.
Exactly. I would definitely agree with you there. I mean, we saw a breakdown in the technology sector, and obviously the NASDAQ 100 is heavily weighted towards technology. So it makes sense this kind of follows suit. And you drew a ascending triangle pattern. We saw a decisive break through the 50-day in this case. So that's kind of the thing that differs between the S&P 500, where we're still kind of holding on to that level and trying to reclaim it. Whereas with this chart with the NASDAQ, we've lost that level, and we're still having a little bit of a pause, a little bit of an indecision day. But I think that next resistance obviously will be that 50-day moving average, and then traders may look for those previous swing lows there right around 24,500 as that next level of support as well in the short term.
Okay. All right. So you're talking horizontal support at an area we've previously tested that comes into play right around there, 24,650 or so. And then, as some of you are calling out, the 100-day moving average once more, testing it as we speak. That's a notable level. Also, I'm going to call out that we do have lower highs on the RSI, validating to an extent the struggle we've seen in price action here, Rachel. So we shouldn't be surprised. And again, as traders, we need to know that these moves that we've made over the last 2 days, they may be significant, they may not. We've been working with the 50-day moving average, and so if you're 2 days below the 50-day, some traders would say that's a sufficient reason to lighten up NASDAQ heavy positions, for example, or maybe technology-specific positions, but we all have our own plans to that extent. So if you're feeling like this is an area of support, well, then the one thing I'll try to remind you is, as traders, we try not to sell at support. We want to hold at support. We want to force the breakdown of our price action to validate before we step out of those trades. Selling at support just feels terrible, because invariably that's, at least in my experience, when I sell at support, it's when the market finds its foothold at the level that I deem support, and then we tend to move off of it. So, try and set your levels as, hey, we broke support, I'm validated, I should be a seller here, or I should reduce my risk. When we break resistance, hey, that's a great sign. Let's see if we can add some risk or exposure to the market, just generically speaking. Now, Rachel, if we kick off, I'm going to move off of the NASDAQ here, back to our standard moving averages. We're going to jump over to the Russell. As I do this, I just wanted to answer one question in the chat, which was from Adventure Golfer about the script for the various sector relationships. We're going to show that to you all momentarily. That's one of Rachel's go-to charts. I'm going to show that for you here as we expand our discussion in a moment, and I will share that script with you all here in the chat as well. So, Rachel, talk to me about what we see in the Russell 2000 here. Yesterday, we had a pretty weak open. We finished better than our open, though. So can we take anything away from what we got yesterday specifically?
I definitely think so. Then this picture of the Russell 2000 is definitely a lot different than what we're seeing in the other major indices. We've seen a break to new highs. Even though we did fill that gap yesterday, we had almost like this inverted hammer type candlestick there after kind of a little bit of a sell-off. And then we're actually trading right above that level right now. So I think a lot of folks will look for a close above that high of that previous low day that we just had as a kind of a measure of confirmation that this move may hold, that's not necessarily an exhaustion gap, so to speak. Okay. But we are also just coming off of really high levels in momentum as well, which we saw confirmed the trend. So this could just be a little pause that we're seeing before that initial move higher. But again, we'll have to wait for confirmation in that case.
Yeah, we certainly should wait for confirmation, right? You know, again, we try to lean into closing values more than intraday price action. Yesterday, for example, at one point, this candle looked all right. I mean, it was a pretty filled in green candle, even though we did finish lower in the morning here than we were at the early portion of yesterday's action. I think the interesting moving average here might not be the 20 or the 50, but the speedy 10-day actually now continuing to provide support back to January 5, really, when we got back above it. So some trend traders might use this as a measure of managing the current trend, choosing only to lighten up on Russell positioning with a close under the 10-day. I don't think we are terribly surprised to find that yesterday's low coincided with the 10-day. So with that as kind of a validating factor, Rachel, might some traders only lighten up a little bit if we broke the 10-day first? I mean, waiting to see if the short-term trend could carry a little longer here?
Yeah, I would definitely have to agree with you there because it looks like, I mean, for the last couple weeks or so, we've held that 10-day, and that may be where traders kind of tend to lighten up. But as far as right now, we're still making higher highs. We made a higher low, so there's no break in the trend quite yet.
Not quite yet. So with Russell providing us with some leadership, one of the big moves we got yesterday, and honestly, this is probably what led to that pretty weak open, was what appeared to be the selling of U.S. Treasuries yesterday, Rachel. The 10-year yield jumped pretty dramatically over the last three sessions. It was the Friday close that caught my eye, but it was the continuation move yesterday that really probably put a little bit of stress on the Russell.
I would definitely have to agree because it looks like we're coming. I mean, we obviously bursted through that first level of resistance around 4.2%, yep, or in this case, like 42. And now it looks like we're hovering right around that next level of resistance, right around like 4.35 or so, where you see those previous swing highs. And to me, it looks like, I mean, we broke a level of resistance, obviously, in this kind of base consolidation pattern that we've been in for months now. Now we're trading above the 20, the 50, and the 200-day moving average, nearing that next level of resistance. And to me, this almost looks, I know it's an inside bar today, but it almost looks like a bull flag, bullish continuation pattern from my eyes here.
Yeah, hard to argue with that, of course. The question that I have is how much higher? I mean, I've been talking about this being a risky scenario for us as it relates to the Russell. How much higher now can the yields push? We're basically at 4.3 or testing 4.3, where 4.2 was kind of our important ledge, and yet the Russell today is bouncing back quite nicely. We're very, very limited in scope off from our all-time high in the Russell. So, this is something that bears bears watching, but being perfectly honest, I expected more of a negative reaction on the Russell, and that's just not the way it's playing out, at least not in the short run. But it bears keeping an eye on things, because a retreat in yields, if we start seeing yield come lower, it could, I mean, obviously it could provide us with a little bit of a lift to the small caps here, because they are digesting this move far better than I would have expected. So we'll take it. Rachel, moving quickly into the semiconductors, more continuation here. These are just, I mean, there's just so limited give back here, Rachel. We'd had a significant pullback. It was healthy from our peak to our trough here in November. We sold down about 17%, but basically we're right at all-time highs yet again.
Exactly. It's looking a lot like the chart of the Russell 2000, in my opinion. But essentially, I mean, it kind of speaks to there still being strength in the tech sector. It may just be in a concentrated area like semiconductors. I know we've had some weakness in areas like software and things like that, but it seems like the semiconductor space is holding up quite well, even despite the weakness that we've seen there in that sector.
Indeed. And then the last one we want to hit on here as it relates to industry groups was going to be the transports, Rachel, because two thoughts. One, this is our market now is not the transportation index. And yet, Rachel, when we think about what the importance of the important aspects of the transportation index and how it relates to the broad nature and health of our economy, this is a positive development. Look at the strength here in this space, working against the 20-day moving average. We've been in a short-term uptrend since mid-November, and it looks like holding pretty cleanly here today with a bounce already above yesterday's high, which in this pullback, granted 2 days, would be the low. Yesterday was the low trade of our pullback.
Yeah, that definitely speaks to that Dow theory component, with the averages confirming us finally seeing that strength. And honestly, that could speak a lot to the rotation that we're seeing too, because one of the heaviest, I know Dow is typically more heavily weighted towards like some of those industrials and things like that as far as like the transport. So the fact that we're seeing some strength in that area is definitely telling for future health of the economy, of us producing those goods and needing to transport those goods too. So I definitely agree with you there.
Yeah, and we know there are certainly individual components we can look at here. You're going to need to know the as I like to refer to them, the legs of the stool as it relates to transportation. So those would be your airlines, your trucks, and your rails. We tend to do that here with some Dow Jones symbols here. So to give you an idea, here's the airlines. You can see that they've had a good move, breathing in the short run, but in a bit of a consolidation. We've also noted that the truckers have done better of late. There's a move that looks very much in line with the transportation index collectively. So a nice brief pullback to the 20-day and bouncing off of that. And then you've got your rail stocks as well. RAI, DWC, RAI, and they're a bit more range bound here. So it looks to me, if we were picking on leaders in transportations, it would be airlines that are under consolidation and trucks that are continuing an uptrend in the short term here, according to these charts. Now, Rachel, I'm going to expand a little bit here, answering that question we got from the chat a little bit ago. We're going to bring in your chart, which is the relative strength, the performance of these individual sectors versus the S&P. Rachel, speak to this a little bit. Tell us what you're seeing and what you're taking away from this look here. And I'm going to set it up so that I can share it here in the chat with our viewers.
Yes, of course. So for those that are new to this kind of concept of relative strength, essentially what this is doing is it's comparing each of the sectors in a type of ratio analysis to the overall S&P 500. So it'll basically put the sector in the numerator, the benchmark that we are weighting against, which is the S&P 500, in the denominator in that case. So this allows us to look for areas of the market that may be early improving on a relative basis relative to that benchmark, the S&P 500, that will give us early signs that, hey, this sector may be outperforming the index or underperforming the index in that case. So we're going to look for sectors that are outperforming or with the line moving up in that case. Sectors that are underperforming, they have the line moving down in that case as well. And So if we look at this, we're obviously seeing a lot of strength in a few different sectors. I see a lot of strength in energy, materials, as well as industrials. It actually looks like energy, we just broke through relative strength resistance there in that space. I know that has been one that's actually been outperforming on an absolute basis as well. We're obviously seeing the increasing strength in materials, same with industrials. We've had the leader as healthcare for quite some time, but it looks like the rotation is kind of spilling into some of these other more value-oriented areas of the market. And then I think the major thing that sticks out to me, just given the weight and the overall averages, is just that weakness in technology. We're at relative strength support lows right now. So I think if we tend to lose that level of support, that will again be even more telling that we may see a little bit of struggle in the overall indexes as we see this rotation really taking place under the surface.
Excellent explanation, Rachel. And again, this is a wonderful reminder, I believe, that really there's a lot of ways to look at the same information, right? This is the visual reflection of our relative strength. So if you're more chart relative, more chart comfortable, this can be a great way to keep an eye on things. And many traders are going to keep this grid up and have it slung to another monitor, just keeping an eye on it on a day-to-day basis. Good way to do that. Now, there's some alternatives here in Thinkorswim, of course, and we can do that here in the Market Watch tab as well. There's been some recent changes, everyone. I've added in not just my basic scripting for relative strength on a 5-day or 21-day, but also recently changing in the percent change detail. And I just wanted to highlight this for you all because when I pulled this up this morning and I was looking to add this stuff in, I got to the customize and I saw, oh, we got this percent change since. And here, when you load in percent change since, there's a drop-down menu and you can quickly define it. Do I want percent change on a year-to-date basis, a 5-day, 20-day, 1 month, 6 months, etc.? So I added all of those in here and now I've got them sortable. So in addition to looking at it from a relative strength basis, I can look at it from the raw return basis. And as an example, we've been talking about this, Rachel, you called it out, healthcare. Up 20% nearly over the last 6 months, a big leader for us of late. And there, when you look at what's been lagging, we see technology is still up 7% over the last 6 months, but it's these bit more cyclical or defensive groups that are providing support for the broader market while we take what appears to be a little bit less of a move to the upside in our generally enthusiastic technology and semiconductors. Even though we've seen semiconductors hanging out at the upper level, Rachel, it's clear that we're not getting that in a broad move, right? It's not all of semiconductors all of a sudden.
Exactly. Yeah. And I think, I mean, for those that follow sector rotation, this is definitely important because it's giving you those pockets or areas of the market that are generating alpha, are giving that outperformance in this case. And that's not always technology. Funds flow from sector to sector. So I think this is a really great view of just how you can see that absolute performance in addition to that relative performance that we just saw.
Yep, I completely agree there. Rachel, let's quickly move through some of these sector charts, hitting on those leaders. Let's start with that healthcare move. I noticed it today, a perfectly appropriate pull. I say perfectly, what I mean is a standardized pullback to the 50-day moving average. Very common pullback. What stands out to me, though, are the tails that all come into play here with the horizontal support with the low yesterday. Same thing for you?
Yeah, that's the same thing that sticks out to me. Another huge thing for me is if you connect those highs, those recent highs, you can see we're making a higher high in the overall sector, but momentum is waning where we have a bit of a bearish divergence in the RSI. So that could tell you as we're kind of retesting support here and there, momentum may be waning a little bit since healthcare has been a leader for so long. Maybe we're slowly seeing a kind of pivot, a slow pivot as far as momentum in this trend. But again, the trend is still intact. So momentum isn't a signal in itself, but those are a couple of things that stick out to me here.
Okay, so you're talking about the lower low in the RSI, even though we made a matching low in price and bounced off of it. So there may be a little bit of a slowing to the momentum here. That makes some sense. If you're a trader waiting for confirmation, a couple of things that could be considered confirmatory. One would be today's close. If it looks like this, some would call that a hold move, of course, a close above the high of the low day, calling yesterday the low day. An alternative to that might be a visual close, over the 20-day, over the downtrend line, something like that might be an area where traders would be a little bit comfortable getting that exposure added. So something worth watching there. The big move, of course, we needed to talk about has been in energy, though. We've cleared an important level here, Rachel. We talked about it. You and I have been talking about this for a while, as it turns out. We've been talking about the downtrend line in red needing to get violated. We finally got violated, and then we had to test it immediately. There was a bit of volatility in here, and then right back into former resistance, potential support now. I mean, what are you taking away from this, Rachel? Is it the daily chart? Do we need to look at something longer term here?
Yeah, you read my mind, Kevin. So I think it's notable, obviously very notable, that we had that breakout in relative strength in this sector at the same time that price is breaking out, because those two coupled together is very notable, is very important when it comes to just looking at that outperformance. But if you zoom all the way out, maybe to a max monthly chart, you'll actually notice this sector like entirely is the only sector that actually is below its great financial crisis highs, whereas every other sector has broken out. This one has been a laggard for quite some time, a couple decades almost in this case, when just looking at performance relative to other sectors too.
Wow. Okay, so here we go all the way back here to fall of 2012, it looks like. That's about as far back as I can get it somehow. So this is a monthly look, but we are basically looking at making new all-time highs in a space that is suddenly very active. Not alone, but active. And we talk all the time, Rachel, about the importance of moving through a level and what it can lead to for the trader. That's why we monitor them. So it's significant that having taken out the downtrend line here, the snap to the upside's not been small, almost 8% over less than 2 weeks. So that bears keeping an eye on. And of course, no one's going to be surprised at all to see materials moving up, Rachel. You've been kind of a close watcher of materials, to say the least here.
Yes, I will make one last point about energy. I think it's interesting that energy is breaking out at the same time that rates are also breaking out too. So I think a lot of eyes will be watching the energy space, especially commodity prices, as far as how that will have an effect on rates there in that case, and if rates tend to hold that breakout. So I wanted to make the link between those two there. But yes, definitely shifting over to materials. That's been one that has been watched for quite some time, especially just, again, with the moves in some of the commodities like the metals and things like that. It's definitely grabbed attention from a lot of traders here. And we obviously saw that breakout in materials on a relative basis. We saw it first on an absolute basis here with this chart. And it looks like we are reaching those new all-time highs as momentum is also reaching highs as well. So momentum's confirming that move. We did have a little bit of a pause, a little bit of a pullback the last couple trading sessions, but it looks like right now we've rebounded, gapped up again, and are really close to those all-time highs yet again.
So as usual, Rachel, when we talk technical analysis in this class, what we talk about is the trend and what's current trend, short-term, intermediate, long-term, etc. Short-term trend here has been bullish. We can validate that because of our price action above all three of the major moving averages, that being the 20-day moving average in orange, the 50-day in purple, and the 200-day in blue here. This is what I would kind of fall back into one of my favorite sayings, Rachel. These new highs are not bearish in nature, right? Bullishness is what we're seeing here in materials, what we're seeing in energy as well. Now, we've had some spaces struggling. Real quickly, we've touched on healthcare. with energy and materials. Let's just quickly touch on a couple more, and then I want to get to some things that I know a lot of viewers are wondering about, that being the precious metals. But briefly, industrials continuing an upside momentum-based move above that 20-day. We've had some leadership from financials as well. Now, the financials in the last 2 weeks have made a significant pullback. So this is something we got to keep an eye on here, Rachel. What's anything specific that you've been watching as it relates to financials that may have led to what's gone on this last 2 weeks? This, granted, standard, but still pretty good pullback. We're below the 50-day again.
Yeah, we did just have recent earnings for a lot of the banks within the last couple weeks, and then obviously kind of looking at the link between rates as well as just the financial sector as well. So that could have been a couple different catalysts there. I know on an individual chart basis, I've seen a lot of possible bear flag formations showing up on a lot of individual large financials names as well. So it could just be a lot of the reactions after earnings, and then kind of like some of the Fed speak and things like that may be affecting this particular sector.
Okay, that seems reasonable to me. Last one I wanted to hit on from the sector basis is just technology, because we had to talk about what's really been something under pressure. Here we are below the two big ones in the intermediate and short term, below the 20 and below the 50, and below the uptrend line that I had drawn in here. Basically, keeping an eye on this, Rachel. We thought we could hold it, but you can tell we've not had any chances to break this to the upside, and so we probably shouldn't be surprised that this broke the way that it did. We've had some evidence from your RSI and your price action against those moving averages that would have given reason for traders to maybe be a little bit cautious heading into this week.
Yeah, it's funny because I had the same exact drawing on my chart, Kev. So watching the same thing there. It's just funny. Yeah, so we are seeing a little bit of a breakdown. We're finding a little bit of horizontal support, though, it looks like. So we did see that slanted trend line break of support, but we're finding that horizontal support right around those previous lows in mid-December. So I think that's kind of notable. I can't talk this morning as well. With an inside day that could give us that signal of a possible pause, some kind of indecision here. So I think a lot of traders will look to see, hey, can tech make a rebound within the next couple days or so, and maybe form an exhaustion gap in that case, and maybe close that gap that we saw within the next couple days. But I think if we don't hold on to this trend line, we may just see continued weakness in the tech sector, and it may really drop into one of the lagging sectors.
Yeah, I think that that makes some sense, Rachel. We're going to kick next here. I want to make sure that we get to these. So I'm going to bring up a couple of precious metals and let you speak to these if you don't mind, because, of course, this is very important stuff. We've heard from a lot of our viewers and a lot of our traders who want to talk precious metals. So I'm going to bring up the future symbol here for gold slash GC. As I do that, I just want to remind you all, futures and futures options trading, this involves substantial risk, of course, not suitable for all of us as investors or traders. You do need to be familiar with the risk disclosure statement for both futures and options. So make sure you're going through that. We're going to talk about it from just a trend standpoint, what we see on the chart. Rachel, what are you going to say? I mean, this is gold just continues to cruise to the upside. The orange 20-day moving average has been support for it, dating back to probably right around here, November 10 or so. We were above it, then we tested it as support, and it's been support since.
Yeah, even with the pullbacks, we've seen that even momentum has stayed in a bullish regime too. And it's not necessarily, I wouldn't call this a parabolic move in gold. It just seems to be this steady trend to the upside. It does take occasional breathers here and there, but we have a continued move again today, reaching more overbought levels in the RSI. I think the notable thing for me is on the intraday chart. If you drop down, Kev, to a 20-day hourly, I saw a pattern actually forming on this one here.
Let me give you there 20 days. I'm going to back that out just so it's not as lengthy. There you go.
There you go. Wow. So if you zoom in, I see a bull pennant pattern here. So if you connect those highs, those lows there, from the lows from like 47.50 or so, that would be kind of like where the flagpole started.
Yep. So you're talking like so.
Yep, right there. And then, yep.
Yeah.
So a little bull pennant with a target or measured move of this, if you kind of take that flagpole there, it could lead gold just from a measured move perspective, right around 5,000 or so.
Yeah, now we always say, Rachel, the drawing of these details like this is always in the eye of the trader, right? Some traders will draw a measured move like this from the base of the flag, and others will draw it from the breakout of the flag. So depending on how you choose to draw it, you've got various targets, but remember, these are just estimations. We don't approach these as though they are going to happen, of course, but it does give you an idea and a target. And Rachel, I'm sure you'll agree, traders tend to lean into one thing. If nothing else, they tend to lean into round figures. And if we can find $5,000 as a per ounce on the gold futures, that would not shock any trader, I think, to get there. Now, it may shock to get through 5,000 with conviction, but it makes sense that it could get there in theory, right?
Yep.
All right, the last thing on this chart, Rach, is just that the 20 period exponential moving average. In this case, on the hourly chart, so it's a 20-hour moving average. Not uncommon, everyone. Look at what we went through for a period of a couple of days in here. Consolidate, consolidate, consolidate. Oh, we're back on trend. Remember, a lot of these basic tenets of technical analysis that we talk about in this class on a day-to-day chart can still be applied in your hourly charts, your 5-minute charts, your weeklies, your monthlies, etc. That's what's so great about technical analysis, is that ability to carry the concepts over many different time frames. So keep that in mind as well. Rachel, let's kick on over to silver here for you. Same detail and disclosures apply, of course, as we are still looking at future symbols. But Rachel, this one's been a little bit more, well, maybe a little bit more uppity to the upside. Yeah, I mean, it's been a little bit more volatile of late.
Yeah, this one's looking a little bit more of a steeper trend, I should say, than the last one that we saw. I mean, we have seen a little bit of pullback here and there, but it hasn't been much give back. So it really doesn't pause for too long before continuing that move higher. So folks that are trying to get in on this trend, it's hasn't given them quite a bit of time, quite honestly. And it looks like today on the daily, if we zoom in a little bit closer, I think we're having a small little doji candle kind of forming, almost like this spinning top candlestick forming on the daily, which could tell us there may be a little bit of a pause here, a little bit of indecision here. And we do have a little bit of a momentum divergence in the RSI, even though we are still reaching overbought levels. We're making that lower high in the RSI where price has been making higher highs. So like you drew there, a level of valid support could be that level around 80 or so, which is where that 20 period simple moving average is residing.
Yeah, I'm going to say something fairly generic in technical analysis approach here, Rachel. The trend that's been working can continue to win as longer than you might expect. And when you're looking at it like this, there's a couple of considerations. One, we've been above the 20 since that same date here, November 10, same day that gold broke out, by the way, held the 20 since. Number two, we're at 94 an ounce right now. If we were comfortable writing it down to the 20-day and holding it, well, then that means you have to be willing to give up, Rachel, a percentage of 14.5 just to be proven right that support's going to hold. Now, the question becomes, if you're an owner of a position up there, do you want to give up 14% to the support level? If yes, great, hold position then. If not, and you're saying, boy, I'd hate to give up 14% of profits, I might want to cool it, take a little off, and see what happens thereafter. If we find the 20-day and it's supportive again, then that trader might then add back what they take off. But it's very different for all of us. We manage our trades differently. We all have a different approach, a different level of comfort with risk, etc. But know that you have to do the math sometimes, Rachel. That is a significant distance. 14% from where we are right now to where we would find for many to be standardized support. Boy, that's a tough give up, isn't it?
That is a rough give up there in silver, especially on the daily. But Kev, can we switch down to the 20-day hourly on this one and look at a
You got
couple of other more short-term levels that may not be as aggressive as
Okay.
a drop down all the way to the 14%? And you found the same level that I did, kind of right around like 86 or so. And right now, I think it's notable that at these highs, price is really coiling, finding this triangular type pattern here where we've made still higher lows, but we're making a little bit of a lower high right here. So you can tell that there's definitely on the intraday chart some indecision, a little bit of a price squeeze, and maybe a volatility squeeze as well. And we'll just kind of have to see which way this goes. But like we saw, 82, 86, maybe some of those short-term levels, still a pretty sizable give back there, Kev.
Mm-hmm. Good stuff, and a wonderful reminder, Rachel, of the important nature of looking back in various time frames. You all have seen us do this and extend out to the longer term, right? We hit the weekly chart so we can get the 30,000-foot view, but then often we need to drill in to the hourly or 15-minute bars to find that tighter viewpoint that could offer insights as well. So always a good idea to expand your time frames in both longer and shorter term than what you're comfortable with traditionally. Rachel, in our final few minutes, I thought we should hit up some stocks on the news front here this morning, one of which that underwent earnings, if I'm not mistaken, was Netflix. Let me double check on that. I had them in my headlines. Yeah, they had earnings overnight here. And Rachel, earnings were favorable, but I mean, what are you going to say? It doesn't look like a buy when you're making short-term or 52-week lows here.
No, it definitely does not. And it almost makes me wonder kind of what the chart would look like if we zoom all the way out. Because obviously we had that break of support here on the yearly, and we're kind of probably wondering like, hey, where could we find another level of like long-term support here? And it looks like those prior highs, yeah, probably right around 70 or so could be where it goes if the trend, since it looks like it's a strong downtrend to the downside, that could be where price finds a little bit more support there in the long term.
Man, that's still 15 points away. That'd be what, 17, 18% lower? And obviously it doesn't look like a big move in the grand scheme of things over a multiple window like this. This is the max monthly. If I change this back to 10 years and weekly, there you go. So we're below the 100-week here, Rachel. Maybe there's a horizontal support though, right?
Yep.
I mean, we could say that. These are the same lows we saw in January of last year and in April of last year. So those have now been tested. I guess the last question I have on Netflix, Rachel, is that horizontal support that I just drew in, could it possibly be a level of Fibonacci retracement given the move we've had? Because this has been an unbelievable rally from these lows. By the way, so just to give you an idea, everybody, that's 720% from April of 22 to the peak in June of 25. So pretty good 3-year run. And what if I applied a Fibonacci move on that just to see if it validates our tested levels? Well, we fell through the 38% now. So yeah, this is getting dicey, isn't it?
Yeah, it looks like it is. I'm just wondering, since we've had continuous consecutive weeks, I mean, if I'm just eyeballing here, probably like 7 consecutive weeks of just closing down. I wonder if this trend gets extended here and maybe finds support at that horizontal level that you drew there. But we're even showing that it lost the 100-week moving average too, and that's kind of tending to kind of slope out a little bit. So yeah, if we do break this crucial level, I would say maybe a little bit more downside to that 50% retracement, which is a huge psychological level.
Absolutely. And I love that you called out the weeks now beneath the 100-week moving average. Look, we have not been beneath the 100-week, everyone, since we captured it back in May of 24. And now, so again, technicians will often look for something different, Rachel. Well, this is something different for Netflix. Yes, it's been under pressure on the daily, but the fact that we are now 2 solid weeks and perhaps a third solid week under the 100 week is significant. Some traders would use this as a reason to lighten up. Other traders would use this as a reason to add, given the pullback we've seen. But that depends on your time frame, as is often the case. So bear that in mind as well. Last one we'll touch on here, Rachel, was in the news here based on Bank of America upgrade, and it's one that many traders know about. It's Oklo, OKLO. Is up a little bit today, about 5.5%. The headline I have here, Bank of America upgrading Oklo to buy from neutral. New target at 127. That's up from 111 following the company signing of a firm binding agreement with Meta, developing a phased 1.2 gigawatt advanced nuclear campus. So Rachel, that's a positive development from the standpoint of the analyst rather, and a good premium on the target. But remember, price targets aren't guarantees to be achieved, but 127 does represent about a 25, almost a 30% upside if it does get there.
Yeah, I agree. And I actually see a little pattern possibly forming too. Maybe we're forming a little bit of the right shoulder of a possible inverse head and shoulders here, where we see kind of like that neckline right around, what is it, probably like 115 or so, kind of a little bit of a slanted neckline there. But this could be the possible start to maybe this bottoming reversal here as we try to reclaim that 20-day and that 50-day here today.
Excellent call out. I love the little potential inverted head and shoulder there. Got to watch for the break of that last high. That ultimately becomes kind of the decision point. If, I like the slanted nature, but if I removed it and said, you know what, let's just look at what was support back here and what could have been resistance thereafter, well, it kind of right there, right? So, I mean, this level looks important. If we can get Oklo to make a new short-term high over 115, as you called out, that could be a bit of a confirmation of a new developing trend. Well, Rach, we have made it to the time. So as usual, having you on any day of the week is wonderful for me. Thank you so much for being here, sharing your insights. I know our viewers liked it quite a bit.
Well, I always love joining you, Kev. It's always super fun, and I always thank everyone for watching as well. It's been a good one.
It has. Lots of stuff covered today. Thank you all for being here. Thanks for participating. Don't forget to follow the three of us on X, Barb Armstrong CS, Rachel Dash CS, and Kevin Horner CS. We appreciate that. If you liked our discussion, hit that thumbs up for us as well. We're going to get this reviewed and into our archive here a little bit later this morning. So thanks again for being here, for participating, and a big thanks to Barb for managing the chat. We hope you all have a fantastic Wednesday and look forward to seeing you again real soon.